The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I had to take care of some business the past 2 days. I apologize for not being here. I was being interviewed for a position in the government. It's you might have heard about as vice presidencies, but we'll see how that works out. So good to be back. Again, was traveling because of that little interview. Here we go. S&Ps. One of the things that seemingly doesn't really care about bomb attacks in Nice, France, or anything like that, or these things have just been on fire. I don't have to tell you guys that. So we're going to try to figure out how to maneuver through this. We've talked about, after we pass through the 2101, 2105, and even before then, we were talking about, this doesn't look good here. Shielding off and, seemingly Teflon coated to kind of move through those levels. And then when we close above on the weekly, and then, we never look back. I mean, there's people still caught up in this thing on the short side, and, you can just see it, you can feel it. And one of the things that has been really astonishing one of the things, David White cracks me up. One of the things that's astonishing is when I was looking at the some of the internals relative to profiles. I mean, if you guys have the scanner, you know what I'm talking about. But I want to show you. It was for Hillary, by the way. It's me and Elizabeth White and a couple other people were in the green room. Let's see here. One of the things that was super astonishing, actually, I was trying to find some opportunities at the end of the day yesterday and kind of going through some of the normal mechanisms that I use. And, you can see a sea of green here. It's not the reds, even on the 60-minute time frames, are few and far between. And this, I never seen anything like this. This is incredible. I mean, it's rising tides have lifted all boats here. And the reason being, I'm saying that I was looking, in the S&P 500, I'm going to breakdowns. Is this shocking to you guys as much as it is to me? There's two companies here, Fastenal and PEG. There's the reason for the breakdown on Fastenal, just getting back down below profiles this week. And this is a kind of a daily or weekly conditional type breakdown. And here's PEG, So by definition, everything else that you're not seeing here is not in a breakdown mode. So 498 stocks are not in a breakdown mode. And then also I was looking at some of the other ones. Let's look at ones that have been in a uptrend and are reversing down. Wow. Two stocks out of 500. And for you guys that don't have the den, David White is plainly stating that he will not serve if elected. He will not accept the nomination if he's nominated. Here we go. Uptrend reversal. So these are stocks, and this doesn't take a lot to actually be in this list. It just takes something. It's been an uptrend. It's kind of ticking below some profiles on certain time frames. This is another one. I mean, and I hate to be after the fact here. We're always trying to forecast what's going to happen moving forward. But this in itself has been an indicator to me, and this has kind of been the case for the last day or two. There's not many stocks here that are even remotely breaking down with the internals. Therefore, a lot of the metrics that we look at from the index itself and kind of doing a deep dive into it, there's not any cracks in the armor, put it that way, and there hasn't been. So when we started moving through 2101, 2105, and before then we were compressing up into it, and like, whoever's going to be short at this area is going to be miserable pretty soon, more than likely. The internals were very coincidental, and the metrics that we look at on a day-to-day basis with this move up. So has it started breaking down? Has it given you a chance to look at this from the short side in any other way than a very little snippy day trade? The answer is no. So uptrend reversals, there's two stocks. Let's just take a look at these. F5. This is why this is on the case. This is a nice little situation. I like it. I think you can play defense around 117.19. And again, PEG. So meeting the criteria for two of the sorts. So let's take a look at something else. Let's take a look at stocks that are in a strong downtrend. This is the one that killed me. There's nothing in a strong downtrend of the S&P 500. Okay, got a question in the den. I just noticed CAC futures needed in Thinkorswim, TOS, TPS. Is that what you're in the scanner? If you guys want the CAC 40 in here, especially on the heat grid, just send me an email. We'll get it in there. It doesn't take a lot of work to put another index in here. Scanner, yeah. Don't ever say TOS. That's a bad word around here. It's TPS. Anyway, so send me an email so we can get that in the hopper. I'll just pass it on to the tech guys, and then you'll see the CAC 40 in here. And the reason we've got this Shanghai 180 on that on that note in the scanner instead of the Shanghai 380. It's again, I think a lot of institutional guys were like, we don't care about the other 200. That's enough sample. So we have yet to put in another 200, and that kind of satisfies it. We are changing, not that you guys probably care that much who are watching this show, but we are changing the Nifty 50 to the Sensex, which is a lot more stocks out of India. You guys ever traded India stocks? They don't even have any, a lot of the brokers there that we deal with, it's still completely the Wild Wild West. There's not a lot of compliance there. That's what I'll coin it as. So if you're reading stories in India on trading and the latest fundamental news on a stock, buyer beware. All right, so let's take a look at the ETFs here really quick within some of the things within the internals of the S&P. We're going to take a look at these when we get back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're taking a look at the ETF heat grid here when it comes to profiles. I mean, let's take a look at the utilities. Obviously, with the 10-year coming off a little bit, that thirst for yield situation, the dividend arrangement, some people exiting that trade, but let's take a look at it in a second. Everything else, again, that hedge, if you will, let's take a look at it really quick, of this particular sector, obviously not participating as well. But I like the opportunity here. You kind of, knew this was at some point going to be the case. Here's the 10-year, and let me bounce around everywhere before I get to my point here. Here's the 10-year, and we close below. We go back and retest, and that's kind of the harbinger of bad news to some degree for the XLU. But all things considered, and I've been a huge fan of this sector for a long time. They could shoot this sector in the street on Fifth Avenue and it still would do good. How's that sound? Crickets? Okay. XLU. So, again, got a new profile, trying to appear this week, trying to have some inflection points, some new inflection points to pay attention to. But all things considered, this little puppy is, I like this still as the hedge. And you should have this as a part of your portfolio if you're looking at it from a 30,000 foot view. But I really like how it's kind of come down here in the midst of all the, and it's kind of hung around this support area. I love actually the action here. And I think it again, we're always trying to find what's the easier trade. This might be the easier trade. It's not the exciting trade, but the 10-year was that easy trade for a while. We've got to take a break from it right now. We all know why. We've seen the action on it. But trying to figure out the S&P sometimes is, it's one of the harder instruments to trade on the planet. And, you guys, and the 10-year is not that easy. It's not the easiest thing either. But people out there trying to time the S&Ps, a lot of people lose money. I'm just going to tell you that right now. So trying to get some edge based around those S&Ps, other than trading the S&Ps, I've always found is easier. So trying to find anomalies, trying to drill down, find relative weakness, relative strength. It's a little bit easier than piling into the index itself because, you really don't have a lot of things to lean on, except in, some relativity type scenes with other instruments on the globe to trade the S&Ps against. And I'm not a big fan of putting all my eggs in that basket. All right. Tom's still doing the subliminal audio too on the commercials. I missed this show and I'm still whistling the same tunes for the commercials during the 8 to 9 time slot when I wasn't doing the show yesterday. Here's gold. So, we've talked about the big numbers before I didn't do the show the past 2 days. That's a sign of the ads actually working, I guess, on TFNN. Isn't that illegal, though, to do subliminal audio or subliminal video? I got to check into that. Last time I checked, it was. Anyway, 1315 was a big number down below. We talked about, maybe that's the waiting point. And yesterday we reached a low of 1320. So, that I was waiting for a little bit lower myself, and I was depressed that thing bounced off of that area. But this is kind of what's happening now. Bounced before it got to that area. When we get into these, just like soybeans, I don't know if you guys have watched the show, beans, November beans got down to about 1020, 1019, something like that. The unfurlows were 1016 on the weekly. When you have a big wide profile, you're going to have to give yourself a little bit more noise level. And what really what showed on the scanner yesterday is when we get down into these areas within a 10% of the height of the box, it's going to pop up on the scanner as, and let me just find one for you. Well, let me find it real easy. Let me just pick bottom here. It's going to start flashing bottom because that's what we call the noise area. So, stepping in a little bit early, or maybe even using it as a collection area, even down to the point a little bit below, depending on how many contracts you're trading. It's always good to have something on in case you have a bounce like that. But when you have a wide profile, you kind of got to give yourself a little bit of room around these things. And again, this is our daily profile. So we've reached a high today of 1337. That previous pretty important point was 1340. So what do you do with gold now? Kind of in no man's land if you're waking up right now and there's not a lot of leverage here. I don't use the 60 minutes too often unless we have a massively volatile environment and big moves. So right now the 240s, I don't see a lot of edge here trading gold. Put a gun to my head. I'm always looking to look at this particular product from the long side and kind of block out the short side. And right now, I don't think you have a really great risk reward waking up this morning looking at it. So you kind of got to wait on this one a little bit. So silver. This is, I think we had a question the other day about September silver and, whether it's time to go short. I think it was a 3 times ETF on silver. Silver's just amazingly basing again here. And, you've got something to lean on here, 2025. And, I think you go short this product, you're not playing the odds here. So again, silver, I think, is a flat out long. I think you've got short-term support at 2025. And you've got the back the truck up area that we almost hit before around 1904. So right now you can play around with that. Might not be a bad idea. Let's hit the grains really quick. December corn. We talked about this. There's not a lot of things that's gonna really move corn up here and make it stay up. Here's the weekly. Here's the daily. Again, 352 and 370. This kind of overshot it yesterday a little bit, but again, I don't see a lot of edge down here trading corn. Those are the big inflection points, 370, 352. I think you just got to kind of buy and sell around those. Beans. This really disturbed me yesterday. But this morning, guess what? Here was the analogy I was trying to make a while ago when we were looking at gold and the wide profile. We got down to this 1016 rounded off area the other day, got as low as 1021, bounced significantly. This has been so daggone volatile. And I actually tried to short it against this 1091 yesterday. 2 days ago. That didn't work out. And then you got another big inflection point to pay attention to down here at 1034, and we reached a low this morning of 1032, 1033. We're going to talk about beans a little bit more when we come back, folks, and try to figure out which way to trade this thing.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We're finishing up with beans here, like, as in, what do you do with this thing moving forward? You know, you just want to try to base, in my opinion, some bets around the inflection points that you can. Beans are going to be all over the place. I'm a little bit more biased towards the short side than the long side. But, again, there are trading opportunities. 1034, we got down to 1032, 1032 and a half this morning and bounced up. So, again, I think, you know, this really, these levels, so to speak, in the scanner really just provide a framework for you to operate on and try to, you know, keep the powder dry, which is hard to do sometimes, and just be patient and wait and keep the powder dry until you can unload. So, got a hernia saying that. Let's take a look at crude oil. Okay, so yeah, we got back above the weekly unfair lows here. So 45, what is that? 45.66. We're just kind of hovering back above there. A little bit of move up. I think, looking at profiles across all time frames, I'm going to pull up the scanner here, and we're going to go into the futures section. And I'm showing you guys visuals on charts and whatnot, but I kind of read the scanner kind of like I guess maybe I should be called Neo. But when you look at the profiles kind of lining up down here and kind of the border that we just crossed, and I'm not really long biased or short biased right now, crude oil, but when you kind of get above these borders, I think you got something to lean on to play defense, and we may edge a little bit higher here, but the market, in my opinion, should have dragged this thing up a little bit more. That's the only concerning thing. The market gets happy and everybody's happy, and everybody's going to be spending more money and making more money, and crude oil should, in my opinion, in that environment, get a couple of legs going. But again, that's the only concerning thing. I'm not trading crude oil right now. I don't see a huge edge either way. So that being said, let's take a look at the XLE really quick. We're going to go to ETF section, and we're going to pull up the XLE. And I'm going to look at the chart really quick in here. So here's the XLE on a daily, and here's it on the weekly. So, another reason I'm a little bit more put a gun to my head partial, and again, this is not a big conviction, because crude, in my opinion, should have been rallying a bit more. But the XLE is you guys see what's going on here. I mean, here's the weekly, here's the daily. We're trading above profiles here, and the internals are very positive. So when I go to look at this landscape view, this is the level of the market. We've kind of cleared this stuff. We can look at it as support now. Places, again, to play defense on the long side. Any type of rallying crude oil may drive this thing even higher. So, and there's some stocks in here. Let's go to our little friend down here, SWN. I'm just picking one out, for example. I'd be looking, trade breakouts on this particular stock. Again, I think, the sector's saying something, but there's a little bit of anomaly going on with crude itself. So when you're going into looking at picks within the scanner, you're looking for long opportunities. Let's take a look at Occidental, weekly, daily. Yeah, that's not your best one. Take a look at a couple other ones here. This one's really done incredibly well. Getting above the profile here, kind of breaking out, and then kind of basing around it for the past 2 weeks. I mean, I like this one to play defense below 1573 on CNX. Chesapeake, we got to take a look at that one. Here's the daily. Here's the weekly. Again, this, obviously a story stock, but I think you could have a chance to play defense here from the long side. Why is this not doing that? Okay. And we're going to take a look at ExxonMobil. Why is that purple? I have not seen that in a year. Got to check on that one, folks. Haven't seen purple like that in a while. That's weird. Okay, so ExxonMobil, this is kind of obviously the leader of the pack. Let's go into eSignal and take a look at that really quick. Whew. Is it time to short this? No. I mean, this is a stock that, obviously outperforming the sector. Trading $95 right now. Looks like pre-market around 95, 94.60 maybe. So, when do you look at this as a trading opportunity from the short side? I just don't think you have anything to really write home about right now on the short side of this. This has kind of still been buying support, buying support, buying support. And obviously the broad market's been very friendly to this whole situation and feeding on itself. Let's take a look at Apple really quick. This really disturbed me yesterday. We got a little higher than I wanted to, but again, we're still within that noise level. We reached a high yesterday of 98.99. Let's call it 99. The unfair highs on the weekly 98.79. That's what we talked about, waiting patiently until that was approached. I think this is possibly one of the ripest opportunities on the board right now. You've had the market just scream, as you know, and Apple's basically not eclipsed recent highs. We've gotten into that major inflection point. You got a chance to play defense. And I like this thing, even though this is the daily and we might say, okay, we got above this profile here. But again, weekly takes precedence. And I love leaning on that 99 general area and just shorting the crap out of this thing. This is an opportunity, in my opinion. And as soon as I say that, it'll go to 110. But make sure you put your stops in. I like how this thing has kind of shown itself. I love how the market's dragged it up. I'd love to hear some thoughts on that if you guys want to type some things in the den or even call in about Apple. That's my thoughts on it, technically. Let's take a look at the dollar really quick. Been a big fan of trying to hit this from the long side. If we can get my charts to change here. Every time something happens on the E-signal, I always think, I know I haven't paid the bill. I wonder what's going on. Okay, so 95.76, still a great chance to play defense. I love how this thing's spinning around and consolidating after that big move up. I think we have another leg up to at least 98 on this one. And I think you got a great risk reward on this particular scene. That stuff in France, man. I'm not gonna go off the reservation and put it that way, like I did on when the cops got shot the other day. But we're going to talk about that in a little bit, guys. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We're going to take a look at the FTSE really quick, but, awful thing that happened in Paris last night. I know you guys have caught that on the news. There's ways to mitigate that risk. They just have to implement the processes for that. And I think they're waking up to it. Here's the support on the FTSE right now, 65.66. Kind of bounced off there this morning. If you're trading the futures here, 66.60 is the unfair high on the daily. That's the deal on that one. We're going to hit the British pound really quick in the spirit of looking at the FTSE. All right, so again, this got a little higher than I thought it was going to get on the retracement back up. We talked about being able, here's the daily. Again, we talked about support at 130.78 up into that 130. And let me get my chart straight here. We talked about ultimately getting back up into 133. That general area that was that unfair high that was kind of former support, now resistance. We hit that, backed off, came down and touched this. And I want you to see how these, inflection points really are pretty powerful. Yesterday we came down and hit 131.06, and that unfair high is 130.78. So, yeah, again, we're talking about a volatile instrument, giving yourself a little bit of room and having a chance to play defense when it gets near those areas. And now we've cleared the congestion, and looks like 133. You're going to have to pay attention to that general area for support on this to possibly even move higher, in my opinion. So that's the situation on the pound. Taking a look at the yen. This is, I've talked about this. I actually was playing this myself, and I got out around that 105.50 area that we talked about being targets yesterday. So again, that 101 general area, talked about the long-term trade, trying not to get shaken out of it. Maybe an innovative way to put a hedge on, that was up to you. But again, I like this going ultimately up to 110.40. I've been talking about this, but 105.50, 105.40 has been hit. I'd like to see this thing consolidate around here, put the trade on again, and try to get some payout up into 110.40. The fundamentals are on your side on this one, in my opinion, and I like technically how it's kind of broken stride again, finally. But remember, we're kind of at a resistance area, and I'd love to see a weekly close above that 105. And today's Friday, 105.50, I think, was the general area I was talking about. Aussie dollar. I've liked this from the long side, especially when we crossed the border again. And we talked about ultimate target 77.46. That was the place to play defense, crossing the board again, 74.81.3. I've liked this, trying to block out the short side. I like how we crowded these unfair lows and then busted through. I still think we got some room left on the upside in this one. Yeah, Larry's making a comment about, for you guys not in the den, about the incident in Nice last night. My brother-in-law is on kind of a work trip over about 100 miles east of Nice, in that kind of Italy section, the northwest part of Italy. And I think Nice was on the one of the things he was going to do over there while he was there, but he hadn't gone there yet, thank God. Just amazing. They're just going to have to implement the strategy. So here's the Canadian dollar. Getting a little stronger. Again, all these things point to crude probably should have popped. That breakdown here, close below, go back and retest. Remember, the Canadian dollar chart gets lower. That means the Canadian dollar becomes more valued against the U.S. dollar. That's the situation there. Yeah, exactly, Larry. And David White earlier was mentioning something about publish or perish. That was the biggest complaint when I was at in undergrad at NC State. There was a place there called Harrelson Hall. It was where all the math, the home of math, whatever. And I hated that building. But one of my favorite professors, he was a really cool guy, Dr. Rodriguez. He's from Columbia. Really cool guy. I go back to see him still. He's still there. I used to look at him in his office sometimes. He would be exhausted. I was like, what do you used to actually play tennis with him? I was like, man, why do you look beat up all the time? He goes, man, I got to publish these things all the time. I'm paid here to do research. I have to publish. I have to, continue to output research, so to speak. And that was the biggest complaint around there was the professors are so chained to putting out research or, publishing that, teaching was really second nature. I mean, not second nature, but, an afterthought really. They come, scribble stuff on the board, leave, the drill. If there's any professors out there listening right now, you know what I'm talking about if you're at a research college. But, it was publish or perish for him and all those guys. Okay, let me get back to my other screen here. Here we go. Let's take a look at Amazon. This is one we've been, this has been one that's kind of been block out the short side. But yesterday, of all times, we had to, just like on the weekly, let me pick out Amazon again. Just when we have that kind of foreboding new profile attempting to appear, then you kind of got to step back and say, let's wait for higher probability areas to be hit and outputted. Well, here's the output, and then here's where they're hit. Now, we got a similar situation here. We broke out above. We're coming down. We're retesting 731.50. And at the same time, you've got 732 general area. You got 731.5, 732.86. So you got big support here again on Amazon. And you got to, again, you're always trying to, what's the strong stocks? What's the weak stocks? This is one that's kind of started sloughing off a little bit here in the last stratospheric moves up in the S&P. But you've got decent support now, waiting patiently for that to happen around 731.5, 732.5, that general area. Ow. Similar situation. This is one where we've been blocking out the short side, talking about, IBM looking relatively powerful during the Brexit thing and rallying back quickly. And that's what you get. You block out one side, and at least you don't get caught up in the nightmare of something getting completely out of control against you. And what do you do with IBM now? I still think you got to have indications here to trade this at all from the short side. We've got a little request in the den, some stocks to look at. We're going to take a look at these when we get back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, trying to recap here. Here's the S&Ps. Here's the internals relative to profiles. It's pretty sick. 66%. We actually reached 73 as a high the other day. So, that type of spread, sometimes it's not the safest play, but sometimes that is a signal of overextension. Keep that in mind. I have never seen it this high since I've been looking at it. It's incredible. But we've actually reached the same disparity on the downside on the Brexit situation. Now we've reached that on the upside as far as kind of this metrics calculation here. And all this is very simple. And we're doing this on every index, looking at all the internals and just saying how many stocks are trading above, below, and within. And this is the only good news you've got to look at this from the short side at all. But again, you want to be able to play defense against some inflection points, and they're just not there yet on the longer term. But again, this is kind of for guys who are trading a portfolio in long. I mean, we've talked about the breakout on the index itself, and then the internals coinciding very well with that particular scene. And again, looking at some of the, there's two stocks, if you catch in the show late, two stocks on the breakdown scene, uptrend reversals, there's two stocks, downtrend reversals. There's not even many of these because they've all already reversed up. So amazing situation. Crude, we've talked about that. Talked about put a gun to my head. Might be time to get long here above this 45.66. But again, I think crude should have bounced a little bit more than it has lately. That's the only, with, the XLE, the Canadian dollar, the whole 9 yards. But, I like it. Put a gun to my head from the long side, defense below 45.66. 10-year, just to recap on this one, getting a little clipped here the last 60 minutes. Obviously, breakdown here, 132.25, 26. What do you do with it now? I don't think you go long this. You've got to wait now for some lower inflection points. Here's the weekly on the 10-year. Today's Friday. You're going to have some new profiles appear. Massive support on this one's 130.0708. Soybeans. Getting a pretty good bounce here this morning off those daily lows. Continues to power up a little bit here. 1034, 1035. Beans are just going to be all over the place right now. I'm a little bit more partial towards the short side than the long side on beans. So I'm looking at selling the resistance areas on that. The euro, and let me go back to our currency charts here, spot currencies. I'm kind of a big fan of this one on the short side, but I don't want to get shaken out. I've just got a long-term hedge on this. I'm trying to give this thing a little time to fall apart. That hasn't happened, and that actually took about 9 months for the yen to make that type of move up. About a year and a half ago. So I think this thing's ultimately destined to go down. And again, Apple, we've talked about on the recap scene. I love where it's at right now from the short side. If the market comes off at all, I think you could have a decent little trade there. Maybe a couple of points initially. Dollar, I still like from the long side. We're going to mention the Shanghai, but again, nothing to write home about. We've gotten up into this long-term weekly inflection point, maybe a little bit of a trade here on the short side too. Guys, stay tuned for Larry. He'll thoroughly enjoy it, and all the hosts on TFNN. Have a good weekend. Have a good day trading, and we'll see you Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.